Hi guys, welcome back to our YouTube channel. This is part 3 of the chapter Introduction to Accounting of class 11th. In case you missed part 1 and part 2, I have linked in the description. Make sure you watch it. So let's begin. So today's video is about basic terms in accounting, which is very important because it will definitely make your base in accountancy very strong. Okay, so let's begin with today's video. The first one is entity. So what do you mean by entity? Entity means specifically identifiable business enterprise. Separate business enterprise means it has a definite individual existence. For example, Super Bazaar. It may be any business enterprise. Next, ITC Limited. Okay, so ITC Limited and any company or any business entity is called as entity. Okay, it has a separate individual existence. Entity is also known as accounting entity as well. Okay, so the next one is transaction. So what do you mean by transaction? Transaction means an event involving some value between two or more entities. We have discussed in earlier parts that economic event. So in there will be a transaction of money. Okay, so transaction means exchange of value. It is of course money between, this is A entity, this is B entity. So exchange of money between those two entities will be known as transaction, which will go to the books of account. Okay, the transaction may be in cash or credit. So the next one is assets. Assets means items of value used by the business in its production. So which are the items that will be used in the production? For example, machinery. Okay, so next, trucks and delivery boys. So operations or activities or items that will be used by the business for their operation, for going on for the business, that is called as an asset. So assets are of two types. One is non-current assets and next one is current assets. Non-current assets are those which last more than 1 year. For example, of course, machineries, furniture. Okay, so these are the assets which last more than 1 year and hence they are called as non-current assets. Current assets means that last less than 1 year. For example, foodstuffs, raw materials such as perishable raw materials. Okay, so the assets will be of different categories, that is non-current and current. So the next is liabilities. So what are liabilities? Liabilities are obligations or debt that an enterprise has to pay some time in future. In Hindi you can call as curse. Okay, so obligations or debt that an enterprise has to pay some time in future, because if you have taken a loan, if a company has taken a loan, obviously it should be paid for some time. Okay, it may be that a company is obliged to pay. So that is a liability. Okay, so liability are of two types, that is non-current liability and current liability. So non-current liabilities that are payable in more than 1 year, like long-term borrowings, deferred tax liabilities, long-term provisions and all that come in non-current liability part. So the next one is current liability. So the current liability are the debt which are payable in less than 1 year. For example, short-term borrowings such as trade payables, short-term provisions that come in this liability. So the next is capital. So what do you mean by capital? Amount invested by the owner in the firm, maybe in cash or asset. So the owner may invest the capital in the form of cash or asset. So that is called as a capital, and capital is shown in the liability side. Okay, yeah. So the next is liability side. So the next is sales. Total revenues from goods or services sold or provided to customers. So total revenue means it may be in cash or credit. So both will totally account to total revenues. So the customer sale good or service. The customer gets goods and service from the entity. That is called as sales. And the next one is revenue. So what is revenue? Amounts of business earned by selling its products is called a sales revenue. For example, A is a person. He gets product from B, which is a company. So here B will get revenue from the product he has sold. So that is called as revenue. So revenues are also called as commission, interest, dividend, royalties, rent received. So that all will come in revenue. And revenue is also called as income. So the next is expenses. So what are expenses? Cost incurred by a business in the process of earning revenue. Okay, while earning revenue, what are the costs that incurred in the business is called as expenses. For example, we have to pay wages to employees, salaries to employees. We have to bear depreciation. We have to bear the interest, cost of heat, light, telephone charges. That are all expenses. Okay. So the next is expenditure. So spending money for some benefit, service or property received is called as spending money. So expenditure means we are spending money but for benefit, but for service. So that will called as a expenditure. So expenditure are of two types. One is revenue expenditure and the second one is capital expenditure. Revenue expenditure are the expenditures that from that the benefits last less than 1 year. Okay. And the capital expenditure are the benefits that last more than 1 year. Which are the capital expenditures that last more than 1 year? Machineries, furniture. Okay. So the next one is profit. In the previous video, I have explained clearly the profit part. If you didn't watch, then please go and watch it. So the next is excess of revenues of a period over its related expenses during an accounting year. So profit is nothing but the difference between revenue and expense. If the revenue is more than the expense, then it is called as profit. Next, gain. What is a gain? A profit that arises from events which are incidental to business. So this is a profit which is incidental. Somehow the business is earning profit which they didn't expect it. So that is called as a gain. For example, sale of any fixed assets, or winning a court case, or appreciation in the value of the asset are the examples of this gain. So the next one is loss. Next, profit ka ulta is loss. Okay. If the expense is more than revenue, then it is called loss. For example, the loss may be the goods are burnt on the fire accident, or there's loss on sale of any fixed asset. That all comes in the loss part. So the next term is discount. So discount is the term that we all familiar with. Okay. So discount is the deduction in the price of the goods sold. Okay. So someone is selling a good and if he reduces the price of it, then it is called as a deduction or discount. So discount are of two types. One is trade discount and another is cash discount. So trade discount is the discount at which at the time of selling goods it is offered. At the time of selling they are giving the discount. That is called as a trade discount. It is generally offered by manufacturers to wholesalers and by wholesalers to retailers. Okay. So the next one is cash discount. Cash discount is a discount which is given at the time of payment of the amount payable. So that is called as cash discount. Okay. So the next one is voucher. So what is voucher? Voucher is a documentary evidence in support of a transactions. Okay. If we buy goods for cash, we get a cash memo. If we buy on credit, we get an invoice. So that is called as a voucher. If we make a payment, we get a receipt. Okay. So these are all the evidence for the transaction that you have made. So the next is, so goods. Goods are the products in which business unit is dealing. Okay. So the items that purchased for use in the business are not called goods. For example, if a furniture dealer purchase of chairs and tables is termed as goods because he is in that business only. The furniture dealer deals with the chairs and tables. For him, these are the goods. While for the other who is dealing with some other business, the furniture and other chairs, tables are treated as an asset. So that's completely depend on the what business you are involving in. Okay. So the next is drawings. Withdrawal of money by the owner from the business for personal use. This is very important in this drawing. Okay. So the owner has invested money in the business. In case if he has a personal emergency, he withdraws the money from the business, not for the business purpose, but for his personal use. Then it is called as a drawing. And drawing reduces the investment of the owners. Okay. So the next one is purchase. What is meant by purchase? The total amount of goods procured by a business on credit and on cash. Okay. In a manufacturing concern, raw materials are purchased, processed further into finished goods and then sold. So purchases can be of cash purchase or credit purchase. And the next term is here stock. What is stock? Amount of goods which are lying unsold. I mean, there is a shop of dolls, and if the dolls are unsold, which are laying in the godown, okay, or a storehouse, so those are called as a unsold goods, that are stock or inventory. So stock are of two types. One is closing stock and the other one is opening stock. Closing stocks are the stocks which are laying unsold at end of accounting period. And opening stocks are the stocks which are laying unsold at beginning of accounting period. So accounting period may be of from Jan to December or from April to March. Okay. So next one is debtors. Who are the debtors? Debtors are the persons or entities who owe to an enterprise an amount for buying goods and services on credit. And who are the creditors? Creditors are the persons or entities who have to be paid by an enterprise an amount for providing the enterprise goods and services on credit. I will tell you these two terms in a very simple and basic manner. A, B. He is a person or maybe entity. He is a person or maybe entity. So A lends money to B. Okay. So here A is a creditor who lends the money and B is a debtor who owes A the money. Okay. I hope you understand this chapter very clearly. If you want to understand this chapter more depth, more deeply, then go watch our part 1 and 2. Then you will be getting a clear idea of this chapter. As this chapter is very basic and it is very important, you have to clear the all basic concepts in here. So that finishes our chapter 1. If you like our videos and if you want any question answers, then please do comment and like our videos and do subscribe to our channel. Thank you.